As you might expect in a time of popping asset bubbles, house flippers are getting burned. Fed Chairman Jerome Powell has finally admitted what all of us have known for a long time. Specifically, U.S. home prices are in the midst of a major correction or even a collapse. But why the wild swings in real estate prices? And who is responsible for the boom and bust real estate cycles? Not all areas are equally affected. Pandemic-era boomtowns and cities that attracted speculators are going to be particularly hard hit. Home builder confidence is collapsing. Zillow, Redfin, and Opendoor and other iBuyers are selling off their real estate portfolios as fast as they can. Prospective buyers are backing away from the market because they think prices have a lot further to fall. What does this mean for the real estate industry? What does this mean for the future of the economy? And what does it mean for the future of the United States? But before we get into that, please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Mortgage rates have doubled since January. That has crushed buyer demand and cratered values in real estate investors' favorite cities: Phoenix, Las Vegas, Jacksonville. It is a stunning reversal of fortune for flippers. They are now stuck with homes to sell and with loans to pay. Flipping is a high-risk, high-reward business, and now we're facing the high risk, said home flipper Tammy Merrill. The U.S. housing slowdown is roiling the real estate industry. This is causing buyers and sellers pull back from the wacky market. It is a huge blow to home flippers. That includes everyone real estate rookies to institutional iBuyers like Opendoor. iBuyers have basically decided to take losses on quick deals in hopes of avoiding problems before they get worse. Flippers with mortgages need to repay the loans. Rising interest rates make carrying costs much higher. The economic waves reverberate across the market. Speculators can drive prices higher very quickly. Conversely, they also accelerate the move downward. For now, flippers are focused on selling their houses, the faster the better. A small number will keep buying even though finding truly undervalued homes is a guessing game of how far the market will drop, said economics professor Stephen Swidler. It's a human foible. We hate to take losses and we don't necessarily adjust expectations to what they should be, Swidler said. It's like the Kenny Rogers song, The Gambler. Some don't know when to fold, Swidler continued. Home flipping reached a fever pitch at the start of the year. 10% of all real estate transactions were flips, which is more than the rate of flipping in 2008. But the home flipping rate has been falling since Q2 and economic conditions are weakening. Mortgage rates at their highest level in 15 years. Demand has cooled spectacularly fast in Sunbelt cities: Phoenix, Jacksonville, and Atlanta. Pandemic-era boomtowns where affordability has been strained: Boise, Salt Lake City, Denver, Las Vegas, and even Austin. Flippers accounted for 14% of transactions in those cities. Profits on home flips declined from 30% to 25% in the past year. In Austin, for example, flippers lost about 1%. In San Jose, flippers' profit fell from 45% in March to 6.5% in August. Flippers are powering the wild swings in prices, said Mark Zondi, chief economist for Moody's Analytics. They're pushing them skyward when mortgage rates were low, and forcing prices back to earth now that rates are higher, continued Zondi. That's not necessarily entirely bad. Flippers can speed markets to reach their floor quickly. That is because they typically buy cutting prices more aggressively than typical homeowners. Traditional homeowners can typically afford to wait quite a while for more favorable conditions. Flippers can get the housing market moving again by adjusting prices faster. That way, houses might become affordable to buyers. But prices might sink beneath what might have otherwise have been their natural bottom. I had to slash prices mid-flip on 27 houses, said Phoenix flipper Ben Arredondo. I managed to sell most of them, but I expect to lose around $1.3 million, Arredondo continued. I know a lot of investors who are getting hammered, Arredondo said. Institutional iBuyers Redfin and Opendoor are also getting burned like traditional flippers, only on a larger scale. These companies seek to make a profit in part by charging each seller a service fee to take a home off their hands and then resell it after making minor repairs. 42% of the homes that Opendoor sold in August sold for less than what it paid for them. Opendoor lost money on 76% of its deals in Phoenix. Betting on rising U.S. real estate prices was a winning strategy for at least a decade. And the pandemic boom actually supercharged gains. But the markets have reversed course and houses are attracting lowball offers. For the most part, investors so far are paying back their loans, said Noah Brachis, president of Capital Fund. Capital Fund is a hard money lender that focuses on Phoenix, Denver, and Texas. The default rate in the Capital Fund has doubled from 1.25% to 2.5% within the past 2 months. Flippers with nicely renovated turnkey properties will stand out in this market, Brachis said. But it will be painful for those who overpaid, counting on rapid appreciation to make them money, Brachis said. Anybody that's flipping right now needs to be looking closely at pricing of property, Brachis noted. Price it to sell because now is not the time to get greedy, Brachis pointed out. Arredondo, the Phoenix area house flipper, tries to put things in perspective. I won much more over the last 2 years than I am likely to lose right now, Arredondo said. But prices seem to be declining every week as sellers get more desperate and buyers back away. The Federal Reserve has aggressively raised interest rates in 2022. These interest rate hikes have increased borrowing costs. So home sales are declining because lack of affordability is scuppering demand. Sales of existing homes have fallen in every month in 2022. Sales of previously owned U.S. homes fell for a 7th straight month in August. Home builder sentiment is in a record collapse. New home sales are down almost 30% from a year ago. And existing home sales are down 20% from a year ago. Right now, the median price of an existing home in the U.S. is $389,500, which is still pretty high. That means, prices still have further to fall. Nearly 25% of new home prices are discounted. Redfin CEO Glenn Kelman is predicting the biggest U.S. housing crash since the Great Recession. Sensing that home prices are in free fall, home buyers are now pulling back from the market. The ongoing housing recession shows no signs of abating, said Robert Dietz, chief economist for the National Association of Home Builders. Boise, Idaho is 72% overvalued. Austin, Texas is 67% overvalued. Ogden, Utah is 64% overvalued. Las Vegas, Nevada is 61% overvalued. Atlanta, Georgia is 58% overvalued. Phoenix, Arizona is 57% overvalued. Experts predict that house prices could fall by up to 25% over the next few months. But, what do you think? Please press the like button and leave us a comment below. Please hit the subscribe button and hit the bell icon so that you are notified of upcoming videos. Please share this video on social media. Thank you for watching.